Light FM. Hungry Eyes. Eric Carmen, I'm Morning Dave. We're at 8:42 now.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And that all means it's time to find out what is going on Wall Street this morning. A surprisingly good day yesterday, by the way. Let's get the reaction from Philip Statler from Statler Financial Services, who's on the phone this morning. Philip, good morning. How are you today?
Good morning, Dave. Doing well. It is good to be here. You did a good job yesterday, Dave.
We kind of talked it up.
You did good. You chalked it up. It looks pretty, and hopefully we can do the same thing today.
Yeah, things are relative. Everything being relative, things are relatively stable over in the Iranian corridor. And we started out with a pleasant surprise on consumer inflation yesterday morning, and that offset some other weird junk that went on yesterday. Dow ended up to the green, only about $9.50, thanks to IBM. That was up, though. Standard & Poor's was up by 28. NASDAQ was up a full 0.9%, up 233, and the Russell 2000 was up almost 0.4% yesterday as well. On balance, it was a good day, but my Lord in heaven, old big blue IBM. They were falling like a rock yesterday morning while I was giving the information, and they just kept on falling through the day, didn't they?
They did. And I was trying to figure out, was it really earnings or was it something else? And it seems to be that, they suffered a loss in this previous session. They were down like 25% because they released disappointed preliminary results for the second quarter. So it's not a final number yet. Yeah, not a final number yet, but a preliminary number that took them down to, I think it was the worst day they had in history.
It was something on that level, even in the pre-market. From what I understand, that they're expecting missing their earnings per share by something like 8 or 8.5 cents a share. That's about it. They're still going to be profitable, and they're blaming it as much as anything on development delays in issuing their new mainframe computer, which is kind of interesting because the hardware manufacturers have generally been doing pretty well. It's the chip makers that have been getting whacked. So IBM says we're going to be a little bit later and we got some cost overruns, but we're going to make it. And that was nowhere near enough for the investment community, was it?
No, definitely not. I mean, they are coming back a little bit today. I think I saw they're up a little over 1% this morning. About 1.5% right now. So
somebody in their executive suite right now is looking for a window to jump out. So there was an absolute, utterly atrocious day. After good news on the consumer inflation side yesterday morning, today we get the bookend to it, the wholesale inflation, and came up with a pleasant surprise again. Producer Price Index, wholesale inflation, month over month in June. They were expecting a little decline, but we ended up, my people were expecting 0.1% decline. We actually declined 0.3% overall last month. So you say, fine, the price of gas went down because things were quiet in the Iranian front. Okay, fine. But the actual core growth, once you get rid of food and energy, I saw some expecting an increase of 0.3%. One of mine was saying 0.4% expected. Either way, it was a beat. We only went up by 0.2%. That's 2 days in a row of pleasant surprises on the inflation front. What do you think? Somebody's going to say we're going to have a rate cut, right?
Yeah, I've got the core PPI came in at 0.1%.
Okay, that's even better. I had 2/10.
Better, yeah. So, I was listening this morning to some commentary on CNBC, and they basically said the right now the odds are for a rate increase in September are now 50-50.
That was close to what I had last week, which means it hasn't changed that much with the new inflation numbers. That kind of fascinating. I expected some bozo to go out there and say, we've got inflation whip, now we can start going for a rate cut again. Maybe with a White House address?
Yeah, I don't think so. That's not going to happen right now. I mean, that's just that'd be a little yeah, that'd be a little get a little ahead of ourselves there.
Yeah, I think that's premature, but at the same time, we know that President Trump wants a rate cut, and he's doing it. For background's sake, keep in mind one of the reasons that he wants to do it is because those rate cuts would also cut back the refinance costs on the federal debt. So it's in his interest for 2 or 3 different reasons to want to see a rate cut that may or may not, and I think you and I pretty much are in agreement, it's ahead of the skis for the economy as a whole.
It is. Now, I found one interesting number they were talking about this morning is that diesel fuel was down 18% last month.
Woohoo!
Truckers really appreciated that.
Yeah, I was going to say for the transportation industry, that's good. On the other side of the fence, though, we're reacting to the immediate prices on oil, and I haven't liked the price of gas in the neighborhoods I shop in yet. Have you?
No, I have not. Definitely not.
It's no fun whatsoever. You had one other number that I didn't see this morning, and it was kind of a surprise. One of those secondary numbers that we kind of gloss over because how they come up with them means nothing. The Empire State Business Index was a surprise.
It was. The manufacturing index came in at 15.6. The expectation was 8.4. I guess the biggest thing that came out of it was it's the highest number, the second highest number. Let me go right. The second highest number since COVID in 2020. The other number I think was last year. It came in at 19 something. So again, like you said, it's the direction that's important, and that was a significant increase over even last month.
In other words, all good news. We're at the very least showing the overall economy going in roughly the right direction. Just nowhere near as fast as we'd like to see it go. Banks yesterday started reporting. 5 of the big banks all reported. They all beat the street, and they all got sold off yesterday. It was just, it was weird. I mean, you'd get one, they say, yeah, we beat by X, and then I'd see their stock dropping by 4%. It was just not a good day for the banks. I understand they're recovering a little this morning, and we got a couple more stepping up to the plate this morning to either get beat up or rewarded. How did Morgan Stanley end up coming out?
We did. Morgan Stanley had a good quarter. They beat on earnings by quite a bit. They came in at $3.46. They were expected $2.94. So good for them. They beat on revenue as well. They were up 1.5, Dave, but they have just within the last 5 minutes, they have flipped to being down 1.4% right now.
Yesterday's trend continues. You just can't please these people, can you? It does.
Hey, the other one we got, big name, BlackRock reported. They beat on revenue and on earnings. They did well. They are trading up this morning 5%. I had a couple regional banks, M&T Bank. I think they're out of Texas. They had a good quarter as well. They beat significantly on their earnings. And they are up 1.3%. The Bank of New York, they beat, but they seem to be sliding this morning about 1.1%.
Yeah, it was scary with that mixed bag reaction to all those reports. Jamie Dimon yesterday said, it's getting close to as good as it gets, thanks to all the profits on trading and deal making. If this is as good as it gets, you beat the street by a mile and still get sold down. I don't like as good as it gets, do you?
No. Hey, another tidbit I got today coming out, PayPal in the news. It seems like Stripe has teamed up with a private equity company called Advent to offer PayPal $53 billion for their company. It's got PayPal trading up almost 20% this morning.
Wasn't PayPal the target of an overture for a buyout from somebody else a few months ago? I'm remembering that vaguely, and I don't remember why.
I don't remember them. I don't.
Yeah. It seems to me like they've been in play before, so I find that kind of interesting. Other company indications you heard?
So another one that people have been following, people jumped on the bandwagon real quick with Pentair. I think that's how you say it. It's been a hot stock for a while now. However, they did not come out with their earnings. They came out with kind of like IBM yesterday, their preliminary second quarter results. significantly missed what the expectations were. And so they are sliding today down almost 24% right now.
Well, crap. I'm looking at green ink on the futures, and we got no good news. By the way, I got to mention SpaceX closed yesterday at 136.08 below their insider IPO price. Kind of makes you sit back and go, what?
So if you wanted it at the IP price, go get it now, right?
Yeah, that's right. You can get the insider IP price on the thing. A lot of risk out there, a lot of stocks going the opposite way you expect them to with good reports. That means a lot of us that are getting up there in years are saying, holy crud, if I got a lot of equities, can't predict what the heck's going on. There are people out there with retirement plans, though, that don't have enough risk in their portfolio. That sounds counterintuitive given the way the day is going. Tell me more.
It does, Dave. But here's the deal. As we look at Risk-Wise Wednesday, we want to talk about the hidden risk. And the hidden risk that nobody really likes to talk about is not having enough risk in your portfolio. You've got it all sitting in banks and CDs. A lot of times that's not enough to help keep up with inflation. I know you see markets that look like, well, if I'm invested in this, I'm down 2 or 3%. Yeah, but that's temporary. A lot of times, if in a conservative portfolio, you're going to get some more positive returns than negative returns on an annual basis that will outperform some of those CDs and stuff. So, you need to look at that in terms of risk. And what I look at is obviously age. Everybody thinks age is the key thing, and it is one of the key indicators, right, as to what you should have. But they use the rule of 100. And the rule of 100 says if I'm 65, then I should have maybe 25 to 35% of my portfolio at minimum in the market to create some income, to create some growth to help offset those things. Even a 90-year-old, we should have about 10% in the market. So not having it can be just as bad as having too much. And so it's important to know how much you should have in the market versus how much as you have protected. And that's one of the things we walk through in our core retirement design, Dave, is to figure those numbers out so that people are comfortable with the amount of risk they do have in their portfolios.
Understood. And it varies, like you said, by age and by status in terms of how much you got to play with, right?
Absolutely.
Absolutely. Resetting the table for the morning, it was a relatively green day on Wall Street, even weighed down by IBM's disaster. Even the Dow was up. 45 minutes before we opened this morning, what are we looking at?
Well, Dave, right now it's actually looking pretty good. The Dow is up about 1/3%. The S&P 500 is up 1/3. NASDAQ 100 is up 6-7, almost 0.7%. The Russell 2000 is up 1/3. So everything's looking good there. On the other side of the coin, we got silver down 0.6, gold's flat right now. Crude oil up almost 0.6%, but it's just a few cents less than $79.79 a barrel right now.
I'll take what I can get. I was watching the futures yesterday morning, and we spent most of the overnight hours on the future markets over 80. It finally got down into the 79s by the time I was reporting it, and I was heaving a sigh of relief over that. Looking across the pond, the Asian Rim market was happy with our inflation numbers, the fact that we held up all right. The mainland Chinese markets were off by a little, but most of the rest of the Asian Rim was green this morning. The European community is saying, okay, we can survive this. German markets are having a rough day, but other than that, the average European index is up by about 0.2% halfway through their trading day. So I got mostly green ink around the rest of the world as well. If this makes a difference to your retirement plans day by day, like you've been saying, you got too dang much risk in your portfolio, time to get a hold of Philip Statler and find out how to be able to stabilize things. How do I find you to get that done?
Then give us a call at 382-0037 to schedule their core retirement analysis, where we'll look at where they are, where they're trying to get to, and how close they are and what they need to do to get there. Because we want folks in Highlands County to have the retirement they always dreamed of. And then this weekend, watch the Statler Financial, not watch it, Listen to the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And we'll get together tomorrow morning about the same time to bring you up to the minute as to what's going on. Have a good day, my friend.
All right, take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Coach Ben, I'm glad you're with me. Hope you're having a great week so far. Listen in this weekend for the Statler Financial Radio Show. Good tips there, and catch us again tomorrow. Until then, have a great day.